Hello friends, and welcome back to DWP Guide UK. If you receive pension credit, housing benefit, or any other means-tested benefit, I need you to stop scrolling for the next few minutes because something has changed in the way banks and the DWP work together, and it affects millions of pensioners across the country. This isn't a rumor, and it isn't scaremongering. It's a real system that is now live, and the people most likely to be caught off guard are the ones who've never even heard of it. In the next few minutes, I'm going to walk you through exactly what's changed, the specific things that can trigger a review of your payments, and most importantly, what you can do right now to make sure you're never one of the people who gets that unexpected letter. Stick with me, because the third thing I'm going to show you catches out more pensioners than almost anything else, and it has nothing to do with how much money you have. So let's start with what's actually changed, because there's a lot of confused information floating around, and I want to give you the accurate picture first. The change is called the Eligibility Verification Measure, and it's part of the Public Authorities Fraud, Error, and Recovery Act. Under this system, banks are now required to flag certain accounts to the DWP when they show what's called an eligibility indicator, essentially a sign that something may no longer match what's been declared. This isn't a pilot anymore. Banks have been rolling this out since late last year, and by now the major high street banks are actively sending these flags through. Now, here's where most of the panic online gets it wrong, and I want to correct it clearly. The DWP does not see your individual transactions. They don't know you bought a coffee, paid your energy bill, or sent your grandchildren a birthday gift. What the system looks at is far narrower than that. Your overall account balance against the relevant threshold. And in some cases, signs that a card is being used outside the UK for an extended period, that's it. That's the scope. And critically, a flag does not mean your money stops. Every single flag case goes to a human caseworker for review before anything happens to your payments. Nothing is frozen automatically. But I do want to be honest with you, a flag can open a review, and if that review finds a genuine issue, it can lead to a pause while things get sorted out. So let's talk about exactly what can trigger that review, because this is the part you actually need to act on. The first trigger is savings above the capital limit. If you receive pension credit, the rule has always been that your savings and investments need to stay below £16,000 for you to remain eligible. That rule isn't new. What's new is how consistently it's now being checked. If your account balance shows you've crossed that threshold, your bank is required to notify the DWP and a review opens from there. Here's the reassuring part though. If your savings are below that limit, absolutely nothing changes for you today. And even between £10,000 and £16,000, you're not disqualified, though the DWP does assume a small amount of notional income from those savings, which can slightly reduce your payment. Below £10,000, your savings aren't counted at all. So before you worry, take 5 minutes, check your balance, and know exactly where you stand. But savings aren't the only thing being watched. And this next part surprises a lot of people. Pension credit is designed for people who are resident in Great Britain, and if you're abroad for more than 4 weeks, or up to 8 in exceptional circumstances like a bereavement, your entitlement can be affected. If the system picks up that your card is being used overseas for a long stretch of time, that can flag a residency review. Now, before you cancel your holiday plans, let me reassure you, a 2-week trip to Spain changes nothing. This is about extended absence, not the odd getaway. If you are planning something longer, the smart move is simply to ring ahead and check where you stand, rather than finding out after you've already left. Now here's the third thing, and honestly, this is the one I think deserves the most attention because it has nothing to do with your finances at all. It's about your name. The DWP needs the name on your bank account to match the name on your benefit record, and in practice, this trips up far more people than you'd expect. A pensioner whose bank account still carries a maiden name while their benefit record shows a married name. Someone whose bank knows them as Bill, while their official record says William. A surname that was spelled slightly differently decades ago and never got corrected. None of these are your fault, and none of them mean anything is wrong. But if the records don't line up, it can create a delay while the discrepancy gets sorted out. So here's what I genuinely encourage you to do this week. Log into your bank account, check the name exactly as it appears, then check what the DWP holds for you, either through your gov.uk account or by calling the pension credit line. If anything doesn't quite match, get it corrected now, while it's simple, rather than after a letter arrives. Let's talk about one more thing, because I think it's been misunderstood in a lot of places online, and it deserves a clear, calm explanation. The DWP does have stronger recovery powers now for money that's genuinely owed to them, but, and this is important, these powers apply to people who already have a confirmed debt with the DWP and have refused to engage with repaying it. They are not aimed at ordinary pensioners simply receiving their benefits. If someone has an outstanding overpayment and consistently won't respond to letters or set up a repayment plan, the DWP can now recover funds more directly, and in the most serious and persistent cases, apply to a court over enforcement action. But if you get a letter about an overpayment, the solution is almost always simple. Call the number on the letter, explain your situation, and set up a plan you can actually afford. Engaging early keeps you completely outside of any of that enforcement process. So let's bring this together, because I promised you a clear plan, and here it is. Check your savings balance and know where you stand against that 16,000 pound line. If it's changed and you haven't told the DWP, ring the pension credit claim line on 0800-99-1234 and update them yourself proactively rather than waiting for the system to find it first. Check the name on your bank account against your DWP record and fix any mismatch now, while it costs you nothing but 10 minutes. If you're planning extended time abroad, call ahead and confirm your specific situation before you travel, not after. And if you've ever received a letter about an overpayment, don't let it sit. Call DWP Debt Management on 0800-916-0647 and get a plan in place, because engaging always gives you more options than silence does. None of this is designed to alarm you. The truth is, if your paperwork is in order, your savings are below the threshold, and your name matches across your accounts, this change affects you in no meaningful way at all. It's simply a more accurate, more automated version of a system that's always existed. But small gaps, a name that doesn't quite match, a balance that's crept up without being reported, are exactly the kind of thing that used to slip through for years and now won't. So take the 10 minutes this week, check the details. Get ahead of it. If this video helped clear things up for you, do me a favor and hit like, drop a comment if you've got questions about your own situation, and subscribe with the bell on, because DWP rules shift constantly, and I'll keep breaking down exactly what each change means before it ever becomes a problem for you. Share this with anyone you know on pension credit or any other DWP benefit. It might save them a very stressful letter. Thanks for watching, and I'll see you in the next one right here on DWP Guide UK.